Something unusual just happened in the silver market, and almost nobody's talking about it. While most investors are watching the daily price moves, wondering why silver hasn't exploded yet, a deeper signal just quietly appeared beneath the surface. It is the signal that historically shows up before some of the biggest silver rallies in modern market history. The strange part is that when the signal appears, the market usually looks calm on the outside, but underneath, something powerful is building. And if you've been following silver, you know that when pressure builds quietly like this, it doesn't stay quiet for long. Right now, silver prices may look like they're just moving sideways. Some days up, some days down. Nothing that seems dramatic at first glance. But if you zoom out and look at the structural signals forming inside the futures market, the inventory levels, and the positioning of large players, a very different picture starts to appear. A picture that suggests silver might be entering the kind of setup that has historically come before major surges. Before we go deeper, if you follow precious metals or want to stay ahead of what's really happening in the silver market, take a second to like this video and subscribe to the channel. Here on Silver Shockwave, we break down the signals, the data, and the market forces most investors never hear about. And right now, the signals forming in silver are too important to ignore. Let's start with the signal that just triggered. In the futures market, something interesting has been happening. Open interest has been rising while the price has not moved significantly higher. Now, at first glance, that might seem confusing. If more contracts are entering the market, shouldn't the price be moving up faster? Not always. In fact, when open interest climbs while prices remain stable or slightly pull back, it often means that positions are quietly building. Large traders and institutions tend to accumulate positions during periods when the market appears quiet. They avoid pushing the price too quickly because sudden spikes attract attention. Instead, positions build gradually, almost invisibly. This type of behavior has appeared before several major silver moves in the past. When you look back at historical rallies, there are often periods where silver trades sideways for weeks or even months. During that time, open interest quietly expands, physical inventories tighten, and the market slowly shifts beneath the surface. Then suddenly, when the pressure becomes too strong, the price begins to move rapidly. But the futures market isn't the only place where signals are appearing. Another important factor is the physical supply situation. Silver is not just a monetary metal like gold, it's also a critical industrial metal. It's used in electronics, solar panels, electric vehicles, and many advanced technologies. That means demand for silver doesn't just come from investors. It also comes from industries that need the metal to build their products. Over the last few years, industrial demand for silver has been increasing steadily. Solar energy alone has become one of the fastest growing sources of silver consumption. Every large solar installation requires significant amounts of silver inside photovoltaic cells, and as countries continue pushing toward renewable energy systems, that demand doesn't just disappear, it tends to grow year after year. At the same time, global silver mining hasn't been expanding quickly enough to match that demand growth. Mining projects take years to develop, and many large deposits have already been discovered. It creates a situation where new supply grows slowly, while demand from industry and investors continues rising. When supply and demand begin to tighten like this, the pressure builds quietly inside the market structure. Prices may not react immediately, but the imbalance slowly becomes stronger. Another signal that analysts watch closely is the level of registered silver inventories inside major exchange vaults. Registered silver represents metal that is available for delivery against futures contracts. When those inventories decline or remain under pressure while trading activity stays high, it suggests that physical metal is becoming more tightly held. In the past, similar situations have created moments where traders begin questioning how much physical metal is actually available relative to the paper contracts trading on exchanges. That's when the conversation about supply pressure becomes louder, and this is where things start getting interesting. Because when multiple signals begin lining up at the same time, rising open interest, tight inventories, strong industrial demand, and growing investor interest, the silver market can move from quiet to explosive very quickly. Silver has always had a reputation for moving faster than gold once momentum begins. Some investors even call it gold on steroids, because when the metal starts trending strongly, the price swings can become dramatic. We've seen this before during several key periods in the past 2 decades. For long stretches, silver traded quietly. Many investors lost interest, headlines disappeared, and the market seemed almost boring. But beneath that calm surface, structural pressure was building. Then eventually something changed. Sometimes it was a shift in monetary policy, sometimes it was inflation fears, or a surge in industrial demand, or a rush of investor capital into precious metals. When that shift happened, silver didn't move slowly, it accelerated. And that possibility is exactly why analysts are watching the current signals so closely. Right now, global financial markets are also dealing with several large macroeconomic forces at the same time. Interest rates remain a major focus for investors. Inflation concerns have not completely disappeared. Government debt levels continue expanding, and central banks around the world are navigating a complicated economic environment. In periods where financial uncertainty rises, precious metals often return to the spotlight. Investors begin looking for assets that have historically held value during unstable monetary conditions. Silver sits in a unique position because it combines two powerful forces at once. It's both an industrial resource and a monetary metal. That means demand can rise from multiple directions simultaneously. Industrial buyers need it for manufacturing and technology, while investors buy it for wealth protection. And when both of those forces increase together, the pressure inside the silver market can become significant. Another interesting factor is how quickly sentiment can shift. Markets don't move purely on supply and demand numbers. Psychology plays a major role. When investors begin believing that a breakout is possible, money tends to flow rapidly toward that asset. That momentum can feed on itself. Rising prices attract attention. Attention attracts more investors. And before long, the market enters a powerful trend. Right now, many analysts believe silver could be approaching one of those critical moments where the quiet build-up phase transitions into the momentum phase. Of course, markets are never guaranteed to move in a straight line. Volatility is normal in commodities, and silver is known for sharp pullbacks even during strong trends. But historically, when structural signals like the ones appearing today begin lining up together, they often precede larger moves later. That is why so many experienced traders focus less on the daily price fluctuations and more on the underlying signals forming inside the market. Because price tells you what happened today, but structure often hints at what could happen next. And if the current signals continue strengthening, silver could be entering a period where the market starts paying much closer attention again. For investors and market watchers, the key question isn't just where silver trades tomorrow or next week. The bigger question is whether the quiet accumulation phase that appears to be forming now will eventually turn into the next major surge. History doesn't repeat perfectly, but it often rhymes. And right now, several pieces of the silver puzzle are starting to look familiar. So now the conversation shifts to you. Do you think silver is building toward another major breakout? Or do you believe the market still needs more time before the next big move begins? Drop your thoughts in the comments below, because the discussion around silver is becoming more important every week. And if you found this breakdown helpful, share the video with someone who follows precious metals or is interested in the future of silver markets. Thanks for watching Silver Shockwave, and stay tuned, because the signals forming in the silver market right now might only be the beginning.